For those of us who are Tesla bulls and want to know how many shares we'll need to buy in order to retire and start sipping Mai Tais in Honolulu in 2030, Gary Black has projected the price of Tesla in 2030. For all of us Tesla bulls, Gary's knowledge is a great eye-opener, and the more you go into his model, the more incredible things become. I'll explain in this video why Gary's model is far too cautious and, despite its initial seeming optimism, doesn't fully account for Tesla's potential. Retiring will require fewer shares than what his model suggests. Watch to find out why Tesla will, in fact, be twice as young. Gary's predictions. But please give it a thumbs up before we get too further into the conversation. Subscribe to all of you Tesla brothers as well. Let's take a look at Gary's top secret forecasts for what Tesla will achieve by 2030. Bear in mind the following critical parameters as we review. A single Tesla stock value. Gary looks at 2 Tesla delivery rates and 3 EV adoption rates as his key performance indicators. First, let's look at the big picture. Initial price of Tesla stock. Gary estimates that by 2030, a modest $269 per share will occur, but the narrative goes far deeper than that. We will investigate those specifics first, then return to it. Examine the annual delivery rate by 2030, which is the second metric. Gary anticipates that Tesla will have tripled its current yearly delivery rate to reach 10.8 million units annually. Since most of us are aware that Tesla can easily double its current delivery rate of 10.8 million by 2030, this projection is, once again, extremely conservative. Let's now discuss the most important component, the rate of EV adoption. By 2030, what share of the car market will electric vehicles hold? For Gary, the percentage of EV adoption grew from 3.4% in 2021 to 10% in 2022, then to 16% in 2023, 24% in 2024, and so on until 2030, when it will have reached 60%. Stated differently, he projects that by 2030, there will be 54 million electric vehicles on the road worldwide. According to him, 20 of the 54 million EVs that will be made and delivered in 2023 will be Tesla vehicles. In fact, his projection that the percentage stays constant from 2024 to 2030 includes the notion that Tesla will own 20% of the global market for EVs. However, it seems to me that Elon is not counting on merely holding 20% of the market by 2030. He anticipates controlling far more than that, and I, along with many other Tesla bulls, concur. Although I am aware that there will inevitably be new rivals, Gary is once again taking a very cautious approach because there isn't a company that even remotely compares to Tesla in the EV market today. Instead, I would point to Tesla's dominance of between 40 and 50% of the EV market. The fact that Gary Black believes the average price of a Tesla will be $65,000 is one of the reasons I believe he is overly optimistic and makes a mistake in his estimate. I understand that inflation may alter your idea of what is appropriate to pay for a car, but in my opinion, Elon has been drawing in a wider audience, which includes middle-class consumers who are willing to spend no more than $40,000 on a car. Gary also has high expectations for Tesla's 32.8% gross margins in 2030. I hope he's correct in saying this is really efficient. Now let's examine some reasons why Gary makes assumptions that are simply too conservative. The primary issue with the model is that it solely takes into consideration Tesla's car manufacturing. It ignores the company's current efforts in the clean energy space. Robotic taxis insurance for Tesla and Tesla bots. The estimated yearly growth rate of 47% is amazing, even though he is conservative in his projections because he is only estimating automobiles. However, as you may have noted, the PE represents a Tesla price of $269 with a P range of 61.2 in 2022 and 6.4 in 23. He isn't forecasting this as the PE for 2030, of course. A 6.4 in 2030 doesn't seem plausible to me, but his Tesla pricing of $269 reflects the PE. Assume that by 2030, Tesla's stock price is $269 and the company's earnings per share are $42. At that point, the price-to-earnings ratio might approach 6.4. That's the method he's using. Later on, we'll explain or make educated guesses about the stock price based on his chart. Finally, using Gary's model, I should point out that he projects 44 EV adoption and 45 delivery growth rates here, which are both currently extremely good. Let's use Gary's model as the foundation for our own analysis. Gary's approach solely takes into account vehicles, as we stated previously in the video. It is totally impossible to expect Tesla shares to fluctuate between 269 and 270 per share between 2022 and 2030. One further ridiculous aspect of the idea is that guaranteed by 2023, Tesla will have about 3.6 billion shares. Returning to his more conservative ways, the guy is solely invested in cars, which causes them to share outstanding shares and the delusion. The market cap continues to rise while the stock price remains constant, supporting the argument that may make more sense. Let's expand on our discussion of the stock price. The stock price in 2030 is $269 once more, but only as a result of his peculiar method of calculating PE when a realistic PE is used. Black begins to make sense with his stock price projections when he uses, say, a 69p for 2023. Gary's estimate produces a yield of $552 per share, which is reasonable considering Tesla's $1.9 trillion market capitalization. Put differently, Gary Black estimates that the company might trade at a price target in 6 to 12 months that is more than 3 times the firm's present trading price, which isn't too bad at 69% in 2023. Using a reasonable PE of 55 and a market capitalization of $2.54 trillion, let's examine 2024. Given that Black has just included Tesla's auto manufacturing, the price would be approximately $632 per share. Considering that reasonable ambitions are a market capitalization of $2.5 trillion and an annual salary of $45,632 per share in 2024 sounds about right at this point. The one thing to bear in mind, though, regarding the share price in 2025 is that, according to Gary, Tesla's earnings are expected to soar from $46 billion to $66 billion in just 1 year, a $20 billion increase year over year, and that, given such a large increase, the PE will undoubtedly decline. With this in mind, the PE for 2025 is expected to be 45, which would put our stock price at 720 and yearly reach a $3 trillion market cap. Let's go on to 2026. If I assign it a PE of 40, that would result in a stock price of $832 a share, which is an amazing 4x or 4.5x in 3 years, and that is only for cars. Once more, every calculation aims to maintain a conservative approach. Now, Alyss adds FSD on top of this to make it a little more bullish and, in my opinion, reasonable. Given that FSD prices are rising, let's determine the average cost of an FSD vehicle in 2022 to be $12,500. Several bears believe that FSD won't be worth $29,000 in 2030, despite the fact that they have already grown to $15,000 this month. In 2020, the cost of a basic FSD was $8,000. The $8,000 that was initially allocated has been quadrupled to $15,000, although I believe that price will increase over the next few years and quadruple by the end of the decade. $15,000 is a fair price for Tesla, so let's leave it there. We'll use that figure in this chart to anticipate that the FSD profit margin will be over $1.2 billion. The data indicates that a profit margin of 48 and sales of over $2.5 billion in FSD will rise by 2 annually. With an additional $2 billion, the net income will reach $15 billion, or $303 per share, with a PE of 61. Therefore, the stock price may rise dramatically with the addition of FSD, 625 in 2023, 7 in 2024, 8 in 2025, and 972 in 2026. The company's stock price will reach $12.82 in 2030, and its market capitalization would be close to $6 trillion, which is when things really get insane. That's correct, folks. The value of cars alone has already increased by 10 to 15 to 20 to 30%, and FSD is adding an additional $230 to that amount. That sounds amazing, but if the current price of Tesla shares at the time of recording stays the same, roughly 133.42, by 2030, you will have seen an astounding tenfold increase. I'm not sure about you, but I think it's a good idea to buy all the Tesla stock, guys. Knowing this again makes my links to Maui seem even more genuine. All of these are projections, and nothing in the world of investing is guaranteed, but with a PE of 69 in 2023, it seems reasonable to me. Gary Black projected $550 per share during the following 6 to 12 months. Let's see if a market for this develops. This one is really bad. Though this is still quite low, things could get better, and we could reach 500 or 412 months as opposed to 550 months. In summary, It is anticipated that the market capitalization of automobiles will surpass $1,000 per share by 2030, a fourfold rise from where it is now, based on a 25 price-to-earnings ratio. By 2030, we increased the share price by $230 in SSD in addition to adding robo-assaults and Tesla insurance. Though it's been a while, hopefully this one was particularly educational. How does Gary Black's analysis sit with you? Do you think it makes sense? Tell us in the comments below. We appreciate your time, and we'll see you in the upcoming video.